Good afternoon, crypto fam. This is your virtual lawyer. I cover all things digital asset and cryptocurrency legal analysis and for educational and informational purposes. And today we got a very interesting topic discussing the co-founder and CEO of Circle, Jeremy Allaire, who is part of the US dollar coin, USDC stablecoin, who wrote a very important and interesting letter. Specifically, he wrote a letter to the House Financial Services Chair, Maxine Walters, Democrat from California, and ranking Republican Patrick McHenry, Republican from North Carolina, along with their counterparts in Senate banking. So he states the time for stable action around stablecoin legislation and regulation is now, helping to build confidence and a foundation of digital assets activity and ushering in the utility value phase of crypto. All right, XRP Army, utility maxis. People have been talking about this for a while. ISO 200.002, utility tokens, real world use cases. Well, here's the CEO of Circle of the USDC stablecoin coming out and writing a letter after the FTX event specifically concerning utility and the importance of ushering in this new era and addressing it with political members of Congress under the House Financial Services Committee, which oversees agencies and regulations involving the SEC and financial services in the United States. This is a volatile time for the entire crypto industry right now. And, honestly, a lot of people have lost a lot of money, and there's a lot of fear, uncertainty, doubt, FUD all over the space. People don't really have a lot of trust right now. They're afraid. They don't know where to put their money. There's the biggest winner is Ledger and these crypto wallets, right, which are a great product, and self-custody is very important because now people are just flooding off the exchanges. People don't trust the exchanges because of what happened with FTX losing money, and they're afraid of illiquid fraudulent schematics going on in the background with exchanges that could potentially risk the money. So people are afraid, and we do need legislation like I've spoken about in previous videos. And we do have a stablecoin bill that has been proposed to Congress, like I spoke about, in February 2022. And we have now the same committee in Congress investigating FTX at this coming December. This is a huge issue. Now, there's a lot of weird crap going on. Just to name a few things, like there's been a class action lawsuit against people who endorsed and promoted FTX. I think Tom Brady and Kevin O'Leary and a few others, high profile A-list celebrities, type of people were on that class action lawsuit. I'm not going to cover that today, but that's interesting considering Kevin O'Leary, who is Kevin O'Leary. I can't put my finger on this situation with him because I really had a lot of respect for him and I really liked him. Big Mr. Wonderful from Shark Tank, if you don't know who he is. And he's just a brilliant investor. Seemed like a solid gentleman, and with his approach with financial analysis and investing analysis and evaluating companies and people, really liked his his what he put out, at least to the world, his brand of who he was. But he's stated recently, he obviously got wrecked like a lot of other investors. But for one, I don't understand how he didn't see through due diligence how he did not see through his due diligence period in investing why this was fraudulent, how they didn't have the backing or the reserves, the liquid reserves, how the way that they were running their business and the back end of the exchange, their valuation, the illiquid reserves versus the liquid reserves, how I didn't see that discrepancy. Or, there are a lot of strange political donation ties. So I don't understand how I didn't see that. And he went as far recently in a video, I didn't believe it. Someone sent me the video on Twitter where he said he would actually consider reinvesting in him again in the future because he, quote, is in the 1% of people. Like me personally, I don't care if you're a hyper genius. You could be the top 1% smartest person in the world. If you lack character and integrity which is doing the right thing when no one's looking, I'm not going to do business with you. As Alex Hormozy states, if you won't do business with them for 40 years or 20 years, don't do business with them for a day. Like, why would you? I don't care how smart you are, if you find it morally acceptable and ethically acceptable to steal from people and just rip people off, scheme people. It doesn't matter how great of a product you created if the product was designed to hurt people. Intent matters, but that's just me. I'm not a billionaire like Kevin O'Leary may or may not be. I know he's a multimillionaire, but it's odd. So all this crap is circulating in the industry, right? And as an attorney, I I'm gonna look at the legal analysis. I'm gonna look at what are the facts, what are the law, and the law's a little unclear because we don't have regulatory clarity, but there are things that are clear, and the facts are all over the place, to be honest, because we're still trying to figure that out. So, but looking at how this whole FTX debacle is unfolding, I do like how the crypto community is rallying together, supporting one another, helping each other, specifically on the spaces on crypto Twitter and the crypto Twitter community. Like, people are really overall, right, coming together and supporting each other, and it's a beautiful thing. And there's power players like this gentleman right here, Mr. Jeremy Allaire, co-founder and CEO of Circle Internet Financial. He's a power player, important member in our community. I'd say the one stable coin that I think has, some credibility behind it, a lot of credibility behind it. He's trying to lobby our Congress to do something about this. That's awesome. So what we're going to do today, this is not like a breaking letter. He sent this letter and posted it on Twitter and published it with a link. It's very, very short. We're just going to go through what he stated to Maxine Walters, Sherrod Brown, the Honorable Sherrod Brown, the Honorable Patrick Mahenry, and the Honorable Pat Toomey, who are part of this Financial Services Committee, Banking, Housing, and Urban Affairs Committee, and what he said to them specifically. I'm going to do that favor for you. I've already read this a few times, but I want to get this out there on what positive things are happening in our community with some leadership, some positive leadership, trying to take the right action to get some damn legislation in place and some clarity, some regulatory clarity, right? So to jump right in, he states, I applaud the bipartisan progress that has been made on offering a framework for regulating payment stablecoins. It was just over a year ago that the President's Working Group on Financial Markets issued an urgent call for Congress to establish a national regulatory framework for payment stablecoins to protect consumers and support financial stability. The events of recent days are a painful reminder that a lack of regulatory clarity drives activity offshore in a way that can harm U.S. consumers, investors, companies, and the country as a whole. Preach. Congress should act now to pass comprehensive payment stablecoin legislation, right? Payment stablecoins are an important innovation that makes payments faster, cheaper, programmable, and more inclusive. Circle's payment stablecoin, USD coin, USDC ticker, is transmitted over public blockchains, which are secure and open to all. Federal legislation is necessary to protect consumers, promote responsible innovation, support U.S. economic competitiveness, and maintain the U.S. dollar as the preeminent currency on the internet. The Biden administration's executive order on responsibly developing the digital assets market makes clear that this is a matter of national economic competitiveness and security. The benefits of public blockchains are available to innovators like Circle and traditional merchants and financial institutions alike. In fact, many traditional financial services companies are utilizing blockchains to upgrade legacy infrastructure and have found that the technology can help small and medium-sized enterprises level the playing field against much larger competitors. Most merchants, quote 87%, for example, say organizations that accept digital currencies for payments will have a competitive advantage. And most merchants expect digital currency payments to become ubiquitous in the next 5 years. Larger institutional actors also leverage blockchain to support key business goals. Now, I love what he's saying here. The fact that we already have traditional financial services and companies utilizing blockchains is one thing, but it's a bold statement to say that it will be ubiquitous in the next 5 years, to expect digital currency payments to become ubiquitous. That is a tongue twister. Ubiquitous in the next 5 years. I agree. I agree, because we are using outdated infrastructure in the payment system, and it solves a real problem from that key area. At least it's clear cut with stablecoins that this solves that problem with the friction and payment processing. So to continue, to see how traditional institutions are leveraging public blockchains and payment stablecoins to benefit consumers, look no further than the global challenge of remittances. Does that ring a bell? Remittances, XRP Army? In a world where information flows effortlessly, most transactions remain time intensive and costly, often at the expense of growth and inclusion. This is felt particularly in the context of cross border payments. XRP Army, I'm queuing you in, among which remittance flows alone are expected to total $630 billion this year. This movement of money, which suffers from long settlement times and fees averaging more than 6% of transactional value, can be accomplished with greater speed and efficiency using blockchain-based payment rails. Combining public blockchains, dollar-denominated payment stablecoins, and traditional payment methods dramatically increases the speed of moving money while meaningfully reducing transaction costs. The programmability and interoperability of public blockchains also enable new forms of economic activity. As an example, individuals and businesses can receive compensation in the form of micropayments, which create new alternatives to revenue models such as online advertising. These types of micropayments have not been possible on existing payment rails because the expense of moving money often outweighs the actual payment. Now, real quick on my notes here on that, that is with the real-time gross settlement, the long settlement times, the fees, 6% of the transactional value. He didn't even mention the fact that when you go international with cross-border payments, these banks and institutions have to have these large reserves of all these different currencies, which is extremely cost prohibitive. And that doesn't even take into account the administrative hurdle and the financial hurdle of like fees and how slow it is. Now, I love how he talks about micropayments, because that's something crypto, the fragmentation of everything really, like to own percentages of something small is an amazing concept that digital assets and cryptocurrency enables us to have. And it does help a more inclusive environment, like they said, and empowers medium, small businesses to innovate in the space, which ultimately helps the world economy. I love it. He goes on, the industry is moving on from its dial-up phase, which is a funny way to put it, where payment stablecoins and blockchains have helped to facilitate the buying and selling of digital assets, to the utility phase, all right? Utility maxis, where traditional commerce, from buying a cup of coffee to funding a new company, will converge with traditional financial services. Reasonable, workable, and clear legislation can unleash new economic activity, offering businesses and consumers the necessary assurances that the value embedded in payment stablecoins is protected under US law, while shielding consumers and markets from deleterious and irresponsible financial alchemy. Beautiful verbiage there. It could also normalize the use of these tools for advancing humanitarian objectives of sending real-time, auditable, and corruption-resistant payments to vulnerable, poor, and marginalized communities. Why would we not want that? Okay? Charities, huge corruption issues with charities. Let's use the blockchain. Let's use stable coins. We can audit this. Everything's on chain. Everything's transparent. There is no predatory middleman if it's adequately regulated. If it's centralized, if it's adequately regulated with the right left and right limits in place, right? And if it's decentralized, then we don't have a predatory middleman at all. this has been, this use case has been talked about since the inception of Bitcoin. When you look at third world countries with crazy inflation and tyrannical governments that are, they can just wipe out a family and take all their money, and everything they own is seized. Like, this empowers people literally in those worst case economic government situations where they can store value, they can have money, and it can be protected where it can't be stolen or taken or used for other purposes that were not consented upon. It's very powerful, right? And this gentleman, he is very eloquently articulating that specific use case much better than I just did with stablecoins. And obviously he's the CEO of Circle with USDC, and so he's promoting that. But I agree with it. I like Circle. I like USDC. I've used it. I'm sure many of you have used it. It actually has you can look and verify their 1-to-1 ratio for their reserves, which USDT does not do, and they've had some legal issues with the Southern District of New York with litigation that I believe was settled. But they're one of the players that's, my perspective is that they're trying to do the right thing, and so this push and these statements being articulated this way in a 3-page letter is important because it's someone who's trying to do the right thing that has power and influence with a credible company. And this is the most simple, obvious use case to begin the process of regulating crypto in our space. And it's a good thing to regulate through this means. Like, we need it. These companies that aren't regulated technically are doing this already to basically pave a path and set a standard and example, and to avoid liability, of course, right? Risk reduction, risk mitigation, of course. However, they're still doing this because they're looking at the banking industry and what, the Bank Secrecy Act and what that requires institutions to adhere to with investors and consumers' money. And they're trying to show, like, hey, look, this is applicable to our space. We're using it over here. This is how we're doing it. You need government, Congress, you need to draft a bill. You need to get legislation out that makes it clear, so we're not guessing, so that people can't just get arbitraged or ransacked, or legislation by enforcement through predatory agencies like the SEC. I'm sorry, I don't have a lot of respect for the SEC. If you look at them historically, they seem to be predatory to me. Like, they seem, I don't want to say corrupt, even though, that's a personal opinion, but just try to keep it not political. Like, historically, the SEC looks as if they're targeting the wrong actors, right? They are targeting people that are doing technically wrong things, but they're also turning their head away and like turning, oh, we didn't see that over here, when like blatant, like far worse egregious errors are happening. So it makes me question their credibility and who they're actually trying to protect based off of their actions, right? They can publish whatever they want to publish, say whatever they want to say, but when you look at what they're doing, it's a lot different than what they're supposed to be doing as a whole, according to their intended purpose by that agency being created in the first place, right? So to continue, he goes on to talk about what happens, like, to light a fire up these Congress members' ass. What happens if we screw up and the U.S. just doesn't do what I'm telling you to frickin' do and what many people are telling you to do? The consequences of inaction in the U.S. are significant, imperiling consumers, enabling continued regulatory arbitrage abroad, and stunting America's voice in harmonizing the use of exponential technologies and financial services and beyond. Other jurisdictions are moving ahead with comprehensive regulatory frameworks for digital assets, and the U.S. is at risk of missing an opportunity to set the rules that will govern the future of payments, money, and other sectors of the global economy. What is more, some countries, notably China, are introducing top-down, highly centralized digital versions of their currency with the goal of outpacing the U.S. and replacing the dollar as the world's reserve currency. All right, this is a global threat. Okay, we don't need to go into global macroeconomics, even though I love that topic and it's fascinating. But there's a lot more of the people that are way more smarter than me on that topic. Raoul Paul is a gentleman. I love listening to his content and following him on Twitter. super smart guy. He talks about the macroeconomics, and they discuss that where where the world reserve currency is at threat, which is kind of how we control keep our power, right? And it's how we stay relevant in the world, and we encourage innovation in the US. That's what we're known for. We're known for pushing the envelope and being builders and creators and innovators and developing technology. Let's not stop doing that. That's what makes America amazing. It's what our history, if you look at the internet and you look at, man, computer systems and computer technology, information systems technology, IT, it's incredible what has come out over the world, of course, but what's come out of the United States is absolutely amazing. And we shouldn't stop doing that. We should continue doing that. I think everyone, that's a bipartisan issue. Like, no, like, do you want the Chinese Communist Party, not the Chinese people, do you want the CCP to overtake the United States as a world superpower? I don't. I sure as SHIT don't. Not at all. I don't. And I don't want to be using China coin. I don't want to be using their CBDC and China all over our payments. So like let's take action. I like it almost seems like our own government, like whose team are you on? The fact that we're so far behind. I mean, you look at Switzerland too, for example. Look at them. Neutral politically. They are so far ahead in terms of comprehension of cryptocurrency compared to the United States. We have a bunch of old dinosaurs in Congress and in our presidential office historically, and they just don't understand this stuff. So hopefully they can understand this simple 3-page letter, a simple 9-page bill, and stablecoins. Like if you remember when you first got into crypto, it is confusing. I get it, but like that's not an excuse. I mean, the internet's confusing. Should we not have developed the internet? Like, it's not confusing to understand stablecoins. It's kind of where we all started. You needed to understand how to buy stuff and trade, swapping. You needed to understand what a stablecoin was. And that was like the first thing that clicks with most people. Like, oh, USDC, it's 1-to-1 pair to the dollar. Okay, and then we can use that to exchange to buy another crypto. Okay, cool. And then I can transfer it. Like, that's the basic, simple stuff. So let's use that with our congressman. I like how stablecoins will be the beginning, hopefully. He goes on, end users, whether they are consumers, businesses, or financial institutions, should know that payment stablecoins adhere to a bona fide regulatory regime with clear protections. Not all so-called stablecoins are created equal. No, they are not. In the absence of federal legislation to provide clear definitions and a disclosure regime for what a stablecoin is and how it functions as a financial product, can result in harm to investors, consumers, and the broader U.S. economy. Any bill worth passing should include essential safeguards to ensure financial stability, protect consumers, encourage responsible innovation, and recognize the important role state regulators play in ensuring the safety of the financial system. Those 4 things are important, right? A federal framework should hold payment stablecoins to high standards with strict reserve, redemption, and disclosure requirements. All payment stablecoins must be backed at par by high-quality liquid assets. SBF, take notes, not illiquid paper fake assets that you have on paper, held in segregated accounts within the U.S. financial system, not offshore in the Bahamas or in another foreign country in Malaysia in some undisclosed bank account or exchange system. An issuer should be required to make regular public attestations on the composition of reserves and comply with the Bank Secrecy Act. Absolutely. Yes. Transparency. Let's have transparency so we know that this stuff is being safe, it's being held responsible. The individuals creating and innovating are being held responsible, and protecting consumers, right? Retail investors, all investors, with safeguards to ensure there's financial stability and there's no type of foul play going on in the background. Blockchain tech and payment stablecoins have the capacity to positively reshape the financial system to advance U.S. economic competitiveness, technological leadership, and national security goals. I urge you to introduce and pass a national framework for payment stablecoins and their underlying open source infrastructure. Sincerely, Jeremy Allaire, co-founder and CEO, Circle Internet Financial. Now, love this. I hope you guys enjoyed that letter. Jeremy, I really appreciate you writing this letter to our congressional members and hopefully lighting a fire up their asses to do their job and hold some people accountable and create some clear regulatory framework. Now, I'm not a USDC maxi. I'm not pumping up USDC or anything like that. But you know, I'm a believer that we need legislation that's common sense, and it makes sense to have stablecoin legislation be the beginning, the nexus of that process. And you know, it does make sense to me as well for USDC to be part of that push. Now, whether or not the United States uses USDC, which is a private corporation that created their own financial product, that remains to be seen. I have no idea. No one does. Who knows? There's two schools of thought. One school of thought from people is, yeah, right. No way the federal government is going to let some private company be the thing. They're going to create their own thing. Okay, I can buy that. That makes sense. But the other school of thought, which also makes sense too, to play devil's advocate, is, well, do you really think the government is capable to quickly roll out blockchain technology and a stable coin if they can't even wrap their heads around this basic concept of what cryptocurrency even is? Like, if they can't even do that, and the government moves slow and historically sucks at anything that they're not innovators, you know, the government is terrible at creating things and doing things efficiently. They are the least efficient machine in the world. If you would look at them as a machine, they would be a very terrible 1980s computer that has a really shitty hard drive and capabilities and capacity. So yeah, that makes sense too. Like, they're not going to be able to necessarily roll out a product and system really fast. So maybe they adopt something that works and take it over. Who knows? Remains to be seen. But I hope you guys like this video. That is the end of this video. I love you guys. I appreciate you. Remember the suicide hotline that I sent out before, the 988 number, and dial 1 for veterans, and crisis hotline if you are in a mental health crisis. Seeking help is not a weakness. You are enough. I want you to know that. So continue to seek help. Continue to be strong in our community. Let's build bridges. Let's support each other. Let's build this space, this amazing blockchain, cryptocurrency, digital asset space, and not destroy each other from within and push people away. Let's bring people in. Let's bring people like myself, who's an unconventional attorney. It doesn't matter. Let's bring more attorneys who are conventional, unconventional, all of the attorneys. Let's bring accountants. Let's bring traditional financial professionals and professionals generally into this space, right? It's got all the sexiness in the world. It's creative. We need some unsexy people. We need some people that are the nerds who want to study the law, that want to look at the accounting, you know, the CPAs of the world. That's what this space needs. And I'm happy to be part of it, right, with my 2 subscribers. So if you guys want to be my 3rd or 4th subscriber, that would be awesome. Just go ahead and click subscribe. And also, if you found even just a fractional reserve of utility in my video, please hit the like button. It really means a lot to me. It really does. So like it, share it. I'll post this on my Twitter. As always, this is the virtual lawyer. Yes, I'm an attorney, but I'm not your attorney. This is all my personal opinion. This is not legal advice. I'm not giving you legal counsel. This is educational and informational purposes only. Always do your due diligence when making a financial decision. Do your due diligence. And if you're making a legal decision, hire a separate attorney. I'm not your attorney, but you can go hire an attorney in the jurisdiction that you live in to represent you, to counsel you, to provide legal services. So with all that being said, I love you guys. Peace. Talk soon. And I hope to see you next time on my next video. All right. Bye.